question number 35. Already I have said must do. It is MRQ, must revise question, as well as super expected. Yes, sir. So what is the question? Let us read. An entity which follow is financial year as per the calendar year grant 1000 share appreciation right. Share appreciation right. So once they have used the word share appreciation right, means it is cash settled SBP. Okay. To each of his 40 management employee as on 1st Jan 2005. As on 1st Jan 2005. Okay, sir? Yes, sir. The SAR, this is SAR, provide the employee with the right to receive at the date when the rights are exercised a cash equal to the appreciation in the entity share price since the grant date. Means the difference between market price on exercise date and exercise price. All the rights based on 31st December 2006. So it was granted on 1st Jan 2005. It will vested on 31st December 2006, means 2 years, and they can be exercised during 2007 2008. So two exercise period. Management estimate that at grant date the fair value of each SAR is rupees 11, and it estimate that overall 10% employee will leave during the 2 year period, and they estimate that overall 10% employee will leave during the 2 year period. Correct? So it is overall 10% employee will leave during the 2 year period. Overall means the word is overall. Okay, means this is not annual departure rate, it is overall rate. The fair value of SAR at each year end are as given below. Now they have given as on year end 1, 2, 3, 4. The fair value is like this. 10% employee left before the end of 2006. So 10% employee left before the end of 2006 means, can I say what was estimated actually happened the same thing? They estimated 10% and actually left also 10%. On 31st December 2007, when the intrinsic value of SAR was 10, 6 employees exercised their option and the remaining 30 employees exercised their option at the end of 2008 when the intrinsic value of SAR was equal to fair value, that is equal to 12. How much expense and liability is to be recognized at the end of each year? Past journal entry. In this question only very important information whatever is given that can be a point of confusion. That is, they have given both fair value and intrinsic value. However, if you have listened my classes properly, so you would have understood by your own. But if you have not listened the class properly, then there may be some doubt regarding this. So for that particular point, I am doing this question. Okay, sir. So let me discuss what actually it is given. So we are doing which question? Question number 35. Let me write down all the information. Question number 35. It is 1 year, 2 year, 3 year, and 4 year. To vesting period, to exercise period. Now it was granted on 1/4/2000. It was granted on 1/4/2000. Sorry, 1/1/2000. It is 1/1/2005. Okay, sir. 1/1/2005. Then this is 31st December 2005, 31st December 2006, 31st December 2007, and 31st December 2008. Okay, sir. How many employee? 40 employee. How many option per employee? 1000. What is the fair value given on grant date? It is 11. Correct now. Understood? Yes, sir. It is given that overall 10% employee will leave over the 2 year. Correct? Understood? And actually also 10% employee left. Actually also 10% employee left. Then they have given also fair value at the end of each period. Means it become 12, then it become 8, then it become 13, then it become 12. However, intrinsic value also given. Can I see intrinsic value we want on exercise day, payment will be done based on intrinsic value. Means, can I say intrinsic value has given 10 and this is 12. I have already said in my class that on the at the end of contractual period, always fair value and intrinsic value will be same. At the end of contractual period, fair value and intrinsic value will be same because can I say this will be actual fair value. Understood? Yes, sir. However, can I say this is also one exercise day? This is also one exercise day. On this date, you can see this is 13 and this is 10. So payment will be done based on 10. However, estimation will be done based on 13. Means can I say this is the expected intrinsic value, and this is what actual intrinsic value. This is expected, not this is present value of expected intrinsic value. So present value of expected intrinsic value as on which date? So expected intrinsic value on which date? Expected intrinsic value on 31st 12 2008. Understood? So you can see, just try to understand, out of 40, 10% employee left, means 4 employee left, so remaining is 36. Out of 36, 6 employee exercise their option on this date and remaining 30 employee will exercise their option on this date. So again, the payment to 6 employee will be based on intrinsic value as on that day only. Means payment will be done based on rupees 10. However, can you say for 30 employee we need to do reassessment of liability? So reassessment, because 30 employee will exercise on 31st 12 2008. So we need to do reassessment of liability based on fair value as on that fair value as on 31st 12 2007, which is nothing but present value of expected intrinsic value as on 31st 12 2008. I hope you are understanding. Have you understood this point? Bolo. Have you understood? These are the entire information now we can do right now. Calculation of EB expense. I hope you have understood that in this chapter the calculation of EB expense is most important. Correct? Understood? Yes, sir. So we write down year end, working cumulative expenses and expenses. Correct? Can we start? So it is 31st 12 2005. So how many employee will take? Because we need to find out number of employee expected to vest on vesting date. So it will be overall 10%. Is 36 employee? So 36 into 1000. Correct. But which fair value will take? So can I say for SAR, this fair value is not at all important. It is not at all important. So we'll take 12 into consideration because we are doing calculation of expense at the end of each year. Got it? So can I say fair value of option on grant date is actually not relevant? Is actually not relevant. So we'll do multiplied by 12 into 1 by 2. 1 by 2, I hope you have understood, because 2 years is the vesting period. Yes, sir. It become 2 lakh 16,000. Expense will be also 2 lakh 16,000. Correct. If you want to also write on liability, there can be one more column, liability, that will be also 2 lakh 16,000. Okay, sir. Got it? Any doubt? No doubt. Then we'll do on 31st 12 2006. Can you see now actual number of employee who actually vested the option on vesting day will be 36 into 1000. We'll do reassessment and the fair value will change from 12 to 8. So it will be 8 into 2 by 2 into 2 by 2. Got it? So this is coming how much? This is how much? 36 into 1000 into 8. That is 2 lakh 88,000. Correct? This is 2 lakh 88 now. 2 lakh 88,000. So what is the expense minus 2 lakh 16,000? That is 72,000. Can I say liability will be 2 lakh 88,000 only because nothing has been paid till now? Yes, sir. Now, can I say for SAR we need to also consider the reassessment during exercise period and any increase or decrease will be also adjusted in expense only. Correct? That already we have done. So 31st 12 2007. Now on 31st 12 2007, can I say 6 employee payment has been done, and for 30 employee payment has not been done. I hope you understood. For 6 employee, what will do? 6 employee into 1000, and payment will be done based on intrinsic value, that is 10, correct, plus 30 employee into 1000. Can I say payment has not been done, means we need to do the reassessment liability based on the fair value as on that date. The fair value as on that date is 13. This is the point where you require some explanation. Have you understood this point? Respond. Have you understood this point? To this become how much? It is, I think, 4,50,000. Correct now. Check it. It is 30 into 1000 into 30. 3,90,000 plus 3,90,000 plus 60. That is 4,50,000. So it is 4,50,000. Correct. 4,50,000. So expense will be what? 4,50,000 minus 2,88,000. It is 1,62,000. Correct. But can I say liability will be what? Out of this 4,50,000, can I say 60,000 will be paid? So 4,50,000 minus what? 60,000, because 60,000 will be paid now. So that is not a liability. This is also a point where you require concentration. So it becomes 3,90,000. Got it? So liability will be 3,90,000 as on this date. Liability will be reduced by the payment, na? Got it. Yes, sir. Then last 31st 12 2008. Now remaining 30 employee will exercise based on intrinsic value, that is 12. So it become how much? 3,60,000. 3,60,000. Correct? Yes, sir. Now just try to understand, to find out the expense. To find out expense, will you compare with 4,50,000 or 3,90,000? Means, can I say out of 36, out of 36 employees, 6 employee payment has been done. So you are doing reassessment of 30 employee. It means now comparison should be done with 3,90,000, not what? 4,50,000. Correct? Be careful about this point. You can see initially it was 3,90,000. Now it become 3,60,000, means liability reduced. Means you need to do some adjustment in expense. Reduce the expense. Yes, sir. So it will be how much? 30,000. And can I say it will pay to liability become 0? Liability become 0. Have you understood this calculation? Entire calculation have you understood? Good. I will say good question. This is a good question from examination point of view. Student will do mistake if they are not concentrating, as well as if they have no conceptual understanding about this chapter. Got it? Bull. Correct. What they have asked, let's see. How much expense and liability past journal entry? Can we do the journal entry? Chalo, journal entry will do. So books of which company? Books of, they have not given. Books of an entity, journal. Can we start? On 31st 12 2005, it is EB expense account debit to SBP liability. It is 2,16,000. 2,16,000. Then 31st December 2006. Then EB expense account debit to SBP liability The expense will be 72,000. 72,000. Correct. Then 31st December 2007. Correct. Now, can I say first we can recognize the expense? Means we should increase the liability by 1,62,000. Then we can do the payment. Correct now. Or you can do one compound journal entry, your choice. Correct now. So we'll do separate journal entry. It will be EB expense, account debit to SBP liability. How much increase it is? 1,62,000. 1,62,000. Then we'll do one journal entry. SBP liability, account debit to bank. So SBP liability account debit to bank. Payment has been done only for 6 employees. That is 60,000. Got it? Have you understood this journal entry? Correct? Bolo. Or what you can do first for 6 employee and then for balance 30 employee. That can be also done. 6 employee and what? The balance for what? 30 employee. That separate journal entry also you can do. This journal entry is also correct. That journal entry will be also correct. Then 31st December 2008. So there is a reduction of expense. What journal entry will do? Batao. Journal entry will be SBP liability account debit to or a compound journal entry also you can do SBP liability account debit. That is what? 3,90,000 to bank. It is 3,60,000. The balance will be adjusted in EB expense. EB expense how much? 30,000. Got it? Done. All the journal entry done. Got it? EB expense means it will be transferred to PL. Have you understood the journal entry? Super easy. Simple. Let's see what institute has given. What journal entry institute has given. First journal entry is okay. Second journal entry is okay. Third journal entry. Acha, they have done the same journal entry, na? Okay. Means they have followed our way only. Okay, chalo theek hai. In this they have given separate journal entry. Okay, chalega. Means you can compound also. What I want to say, you can compound the journal entry also. But they have followed our way only. Means I was not knowing what was the answer given. Chalega? Yes, sir. 35 also done. So we have completed a cash settled SBP. Cash settled SBP we have understood.